Welcome to Quick Wealth Channel, where we dive deep into the fascinating world of finance and global economics. Today, we're unraveling a topic that's pivotal to understanding the world's financial landscape: the dominance of the US dollar as the global reserve currency. From historical shifts to geopolitical maneuvers, we'll explore how the dollar achieved its status and what it means for the global economy. Stay tuned for an insightful journey into the world of currency power plays and their far-reaching implications. Don't forget to subscribe and hit the bell icon for more enriching content. 1. Post-World War II era and Bretton Woods system. After World War II, the global economic landscape was in disarray. Nations sought stability, and the United States, with its vast gold reserves and relatively unscathed infrastructure, was in a unique position to provide it. The Bretton Woods Conference of 1944 was a turning point. Here, world leaders agreed to peg their currencies to the US dollar, which was convertible to gold at a fixed rate. This system created a stable exchange rate environment, encouraging international trade and investment. The US dollar became the de facto world currency, but this was not without its challenges. Countries had to manage their currency values against the dollar, leading to occasional adjustments and realignments. The Bretton Woods system laid the foundation for the modern financial world, but it also sowed the seeds for future economic tensions and currency wars. 2. Dollar over gold and international trade. The decision to use the US dollar over gold as a standard for international trade had profound implications. It meant that countries would accumulate dollars as they engaged in international trade. This system worked well as long as countries trusted the US's promise to convert dollars into gold. However, it also meant that the US had to maintain large gold reserves to back its currency. The situation became complex when countries like France and Germany started to doubt the US's ability to maintain this convertibility, especially as the US increased its spending abroad. The reliance on the dollar facilitated trade but also made the global economy vulnerable to US economic policies and challenges. This reliance on the dollar also gave the US significant leverage over international trade, as countries needed to hold dollars to engage in global commerce. This dynamic has had lasting effects, influencing everything from trade policies to diplomatic relations. 3. Vietnam War, inflation, and the end of gold convertibility. The Vietnam War marked a significant shift in the US's economic policy. To fund the war and its expanding social programs, the US government began printing more dollars. This increase in dollar supply started to worry other countries, as it threatened the value of their dollar reserves. The situation reached a tipping point when countries like France began demanding gold for their dollars, fearing that the US could not maintain the gold standard. In 1971, President Nixon made a landmark decision to end the convertibility of the dollar into gold, a move known as the Nixon shock. This decision effectively ended the Bretton Woods system and led to floating exchange rates. The immediate aftermath saw a period of uncertainty and inflation, as the value of the dollar fluctuated. This period was a critical test for the global financial system and reshaped international monetary policies. 4. The petrodollar system and its global impact. In response to the challenges posed by the end of the gold standard, the US cleverly established the petrodollar system. By striking a deal with Saudi Arabia and other OPEC nations to price oil exclusively in US dollars, the US ensured continued demand for its currency. This move was strategic, as oil is a critical resource in the global economy. Countries now needed to hold dollars not just for trade but also to buy oil. This system reinforced the dollar's dominance and helped stabilize its value. However, it also tied the health of the US economy to oil prices and led to complex geopolitical relationships, particularly in the Middle East. The petrodollar system has been a key factor in US foreign policy and has had significant implications for global economic stability. 5. Euro as a competitor and the future of global reserve currencies. The introduction of the euro in 1999 presented a new challenge to the dollar's dominance. As the currency of a major economic bloc, the euro quickly became a significant reserve currency. This shift has implications for global trade and finance. Countries now have an alternative to the dollar for their reserves, potentially reducing the US's influence. The rise of the euro also reflects a broader trend towards a more multipolar currency world. Nations like China and Russia are exploring alternatives to the dollar in international trade, including the use of their own currencies and digital currencies. This evolving landscape suggests a future where the dollar may have to share its dominant position with other currencies, leading to a more balanced and potentially more competitive global financial system. The challenge for the U.S. is to adapt to this changing environment, ensuring that the dollar remains attractive as a reserve currency. This involves maintaining economic stability, controlling inflation, and managing its trade and fiscal policies effectively. The rise of the euro and other currencies also offers opportunities for diversification and risk management in international finance, potentially leading to a more resilient global economy. 6. Geopolitical implications of the petrodollar. The petrodollar system has far-reaching geopolitical implications. By tying oil, a critical global commodity, to the US dollar, the US has gained significant geopolitical leverage. Countries dependent on oil imports must maintain large reserves of dollars, aligning their economic interests with the stability of the US economy. This dynamic has influenced US foreign policy, particularly in the Middle East, where maintaining relationships with key oil-producing nations has been a priority. However, this reliance on the petrodollar system also makes the U.S. vulnerable to shifts in global oil markets and the policies of oil-producing nations. The recent moves by countries like Russia and Iran to bypass the dollar in oil transactions reflect a growing challenge to U.S. influence. Additionally, the rise of renewable energy sources and the potential decline in oil demand could further alter the geopolitical landscape, potentially diminishing the strategic importance of the petrodollar system. Global reserve currency dynamics and U.S. economic policy. The status of the U.S. dollar as the world's primary reserve currency has significant implications for U.S. economic policy. It allows the U.S. to borrow at lower costs, as there is always demand for dollar-denominated assets like treasury bonds. This exorbitant privilege enables the U.S. to run larger deficits and maintain its global military and economic presence. However, it also creates dependencies and vulnerabilities. For instance, if countries start diversifying their reserves away from the dollar, the U.S. could face higher interest rates and inflation. This scenario could force a significant shift in U.S. fiscal and monetary policy, potentially leading to austerity measures or a reduction in global military and economic engagements. The U.S. must navigate these dynamics carefully, balancing the benefits of its reserve currency status with the risks of over-reliance on foreign financing. 8. The future of the dollar and emerging global currencies. Looking ahead, the dominance of the U.S. dollar faces challenges from emerging global currencies and digital assets. Countries like China are aggressively promoting the use of the yuan in international trade, and the European Union continues to strengthen the role of the euro. Additionally, the rise of digital currencies, such as cryptocurrencies and central bank digital currencies, CBDCs, could revolutionize the global financial system. These digital assets offer speed, security, and efficiency, appealing to countries looking to bypass the traditional dollar-dominated system. The U.S. must adapt to these changes by innovating in its financial systems, potentially embracing digital currency technology, and maintaining the strength and stability of its economy. The future of global finance is likely to be more multipolar, with several key currencies and digital assets playing significant roles. This shift could lead to a more balanced global economic power structure, but also introduces complexities in managing international financial stability. In this journey through the intricate world of global finance, we've seen how the US dollar achieved its status as the world's reserve currency and the challenges it faces in an evolving economic landscape. From the geopolitical chessboard of the petrodollar system to the rise of the euro and emerging digital currencies, the story of the dollar is a testament to the dynamic nature of global finance. As we navigate these changes, Quick Wealth Channel will be here to provide insightful analysis and updates. If you've enjoyed this deep dive and want to stay on top of the latest in finance and wealth building, don't forget to subscribe and hit the bell icon. Your engagement helps us grow and continue delivering high-quality content. Thank you for watching, and we look forward to welcoming you in our next video.